Welcome back to my channel. In today's video, I'm going to reveal my entire dividend stock portfolio. Now I'm going to reveal my top Canadian stocks. I'm going to reveal my top US stocks. And all of these stocks make up around $15,600-ish per year. And most importantly, I will share the 5 criteria that I always look for in my dividend growth stocks. So the first 2 dividend growth stocks that I have are tech giants, and I'm pretty sure you're not going to be surprised when I say it. It is Apple and Microsoft. Now, both of these pay an annual yield of 0.7% for Apple and 0.9% for Microsoft. Now, my third dividend stock is one of the biggest Canadian banks in all of Canada, and they also own banks in the United States, which is Toronto Dominion. And this bank pays a yield of 3.6%. Now, my next position is RIOCAN, who owns one of the biggest real estate holdings in all of Canada. They own mixed use, commercial, residential, and right now they're paying an annual yield of 4.4%. Now, RIOCAN is not a dividend growth stock because they haven't increased their dividends in the last 10 years. They haven't doubled their dividends in the last 10 years, but they've always paid out their distributions every single month. So this is a great stock to have, especially if you are in retirement, because they pay out their distributions every single month. Now, my next stock is another REIT, which is a real estate investment trust, which is GRANITE Realty. Now, this one, actually, I purchased this one because it is a dividend growth stock, because they have been increasing their dividends in the past 10 years. And I'm expecting that they will continue to do that. And the yield that they're paying right now is 3.7%. Now, my next position is another REIT, which is SmartCentres. Now, their anchor tenant is Walmart. So they own a lot of malls. They also own some residential mixed-use buildings. And right now, they pay a yield of 6.2%. Now, SmartCentres is just like RIOCAN. Don't expect anything like dividend growth. It's simply a retirement anchor stock to have because they always pay out their distributions every single month. Now, my next dividend growth stock is one of the biggest telecommunications company in all of Canada, and that is TELUS. Now, the reason why I bought TELUS is because I really like their new growth area, which is TELUS Health. They provide a lot of infrastructure to support and digitizing healthcare. So this is why I bought TELUS. And right now they pay an annual distribution of 4.6%. Now, my next dividend growth stock is a huge pharmaceutical company around the world, and that is ABBVIE. And I'm pretty sure you probably heard of them because they also own Botox. And right now they pay an annual yield of 4.6%. And this is a US growth stock. Now, my next position is a really, really popular insurance company, which is MANULIFE Financial. And right now they pay an annual dividend of 4.5%. Now, my last 2 dividend growth stocks are big utility companies in North America, which is Fortis and Algonquin Power. And Fortis is paying 3.6%, while Algonquin Power is paying 4.3%. So now I'm going to talk to you about the top holdings that I have in Canada and in the US. I'm going to reveal the top 5 holdings. So starting from number 1, which is my biggest position, is Fortis. Now, I have 2 companies that are tied in the top 2 positions, and that is Apple and TD Bank. Now, my next biggest position is another huge utility company, which is Algonquin Power. And the 5th largest dividend paying stock in my entire portfolio is a real estate investment trust, which is RIOCAN. Now, the reason why those dividend stocks are my biggest holdings because they're really like my set it and forget it stocks. Okay, I literally just look at them like once a year or hardly ever because they just do their own predictable thing, which is continuously growing and paying out their distributions to me. That's all I care. So they're sleepers. These are sleep well at night stocks. Now, if you are looking for dividend growth stocks or choosing a dividend stock, I just want to let you know the 4 criteria you should always look for in any dividend stock. The number one is having a payout ratio of less than 75%. And if it's a real estate investment trust, you look for funds from its operations that's less than 75%, because what that means is that they don't pay all their profits out back to you. As much as you would love that, they can't afford to do that. So you always want to know that they have a payout ratio of 75%, which means that over time, as their revenue grows, their cash flow grows, and their earnings, their profit grows, then they will distribute more dividends back to you. So you don't want them to pay out all of their profits back to you right now, because they wouldn't be able to afford to pay you more dividends in the future. Now, the second one is I look for a long history of the company paying out their dividends, at least 10 years. And if you want a very, very good starting point, you could go check out the Canadian Dividend Aristocrat list, which summarizes all the companies that have been paying dividends for a very, very, very long time. Number three, if you're looking for a dividend growth stock, you must absolutely expect that company to double their dividends in the 10 years. Okay, now how you would check that is you go back in its history and look at the last 10 years and check if they've been doubling their dividends in the past 10 years, which I think you can extrapolate and expect that they will continue to do the same for the next 10 years. But it's not always guaranteed, but at least it's better than not having any history of doubling their dividends in the last 10 years. Now, the next criteria is a must. Please, if you're looking for dividend paying stocks or dividend growth stocks, be sure to check that they've been paying their dividends even when the market is tanking. Like if the market is just horrible and they still pay out their dividends, it just shows the resilience and the importance of those dividends, even when markets are bad or even when times are bad. It just shows how robust that company is. And while you're waiting for next week's video, check out this video up here where I reveal my entire stock portfolio and this playlist, which talks about how to invest in stocks. Now, if you found this video super helpful, please help a Canadian YouTuber out like me who loves talking about stocks and real estate and produces videos for you every single week by smashing that like button. And if you haven't subscribed, please hit the subscribe button and that bell notification button. Anyways, I'll see you in next week's video.